How much money do you think Zomato made last year? It is zero. Actually, they made a net loss of around 2,386 crores in the year 2019-20. They were losing money every time someone placed an order. But that is not the full story, and that was also before COVID. The world has changed so much since COVID happened. Zomato is now looking to make profit at an order level, which is called as contribution margin. In this video, I am going to explain how Zomato makes money and what has changed for Zomato since COVID happened. I am Praveen and I welcome you to my channel. As Zomato is planning for an IPO, they have filed their draft red herring prospectus, which is a document that will explain the company's working so that investors make an informed decision before they choose to invest. Most of the information shared in this video is based on that document, which is also publicly available. Some parts of this video are based on my own interpretation and speculation. Let us get started with Zomato's business. Zomato has a dining out service where they list the restaurants on the platform and they sell ads for them. Zomato also sells ingredients to restaurants through a business unit called HyperPure. In addition, they also sell a subscription service called Zomato Pro, gives discounts to the members on both delivery as well as dining out. But their biggest business comes from delivery, and that is what we will focus on in this video. If you take the delivery business, there are three stakeholders there. Firstly, customers who are looking for a convenient on-demand solution to explore restaurants in their city and also order food from them. Roughly 1.07 crore customers ordered through Zomato every month in 2020. Secondly, there are delivery partners. The delivery partners collect food from restaurants and deliver them to customers with a median delivery time of less than 30 minutes. There were around 1.62 lakhs of delivery partners in 2020. Thirdly, restaurants. They are the backbone of this business, and Zomato needs them to succeed and grow for the platform to be sustainable. There were around 131,000 restaurants active on Zomato in 2020. Let us see how the money moves among these three parties and Zomato. Every time a customer places an order, there are four different parts of money that are collected: the cost of food, delivery charges, packing charges, and tips. Zomato retains a commission on the cost of the food and transfers the remaining along with the packing fees to the restaurant. Some restaurants would also pay a premium to be highlighted in their app and pay extra for that as advertisement cost to Zomato. To the delivery partner, tips are directly transferred, but the charge which is collected from the customers, they are too low to make a sustainable income for the partners. So Zomato shells out some money from their own pocket to transfer the earnings to the partner. Let us look at the unit economics of Zomato. They get commission and delivery charges which are inflows on every order. From that, they pay delivery partners, which is always higher than the delivery charge they levy from the customers. Then they need to pay for the discounts and the other variable costs as well. If we put the numbers behind this, you could see they were losing 30.5 rupees on every order before COVID. Now they are making 22.9 rupees on every order. This doesn't translate to profit straight away because there are other overheads like marketing expenses, employee costs, etc. But this is still a good sign. At an order level, they should make profit, and it seems like they did that for the first time last year. Now, how did this happen? We could figure that one out by answering three important questions. Firstly, how did Zomato reduce discounts? A simple explanation here is that people have been ordering more food than ever because they have been forced to stay indoors. Zomato would have reduced the discounts because the people are going to order anyway. How did the customer fee for delivery go up? And at the same time, how did the delivery cost per order come down? This means Zomato is charging more from the customers, they're paying the delivery partners less. On the customer side, they are ready to pay more given the COVID situation, and they might be okay with it. Now, on the delivery side, the earning for a delivery partner is arrived by multiplying the number of orders with the fee per order. If we assume a delivery partner was doing 100 orders per week pre-COVID, he made 5,200 rupees. After COVID, the orders significantly shot up. If we assume it went up by 30%, Zomato had always wanted to trim down the expenses. They might have used this opportunity. Instead of 50 rupees, they might be now paying 45 rupees per order, which comes to around 5,800 rupees in this example. And the delivery partners would still be making more than what they did before COVID. In addition, they would also be getting more tips, so the delivery partners might not be complaining yet. The biggest increase in inflow has been from commissions. Now, how did that increase by nearly 20 rupees on every order? The commission for every order is a product of commission percentage and order value. Now, for this amount to have increased, at least one of these two variables should have increased. We don't know how much Zomato is charging as commission percentage, but it would vary from restaurant to restaurant. There is a high likelihood that they increased that percentage a bit. Now, the second aspect is more interesting. When we look at the average order amount, it has increased by 42% compared to the pre-COVID days. This could have increased the inflows for Zomato. This is also logical. Zomato is going to incur the same cost of delivery whether they are delivering you a 500 rupees pizza or a 100 rupees dosa. But the commissions in both these cases are different, and they would want to keep increasing the average order size. People's eating trends might have also changed dramatically during the COVID period. More and more families were ordering instead of bachelors and young couples alone, which was the case earlier. As a result, they are ordering for more value. Also, high-end restaurants which were earlier not having delivery might have also signed up. For instance, Barbecue Nation started delivering only in July last year. Restaurants like this would have also increased the average order size. To sum it all up, Zomato's unit economics turned up positive for the first time because they started charging the customers and the restaurants more. Number 2, they are paying delivery partners less on a per order basis. Number 3, customers are also ordering for higher value. Now, how much of this is sustainable when COVID goes away? There has been a marked increase in volume and also value. Zomato might look at sustaining them and growing them further. Let's look at the volume first. Currently, only 9% of the internet using population in India is using a food delivery app like Zomato. Compare this with 36% in the US and 50% in China. So, a majority of the internet users have still not experienced food delivery. This market potential would touch roughly $7.7 billion by 2025. Zomato could chase new users for sign-up continually. This is promising, but the new users always expect incentives, which are usually in the form of heavy discounts. That could hurt Zomato's economics on one end. Another challenge is signing up and retaining the delivery partners. Zomato cannot keep increasing order volumes delivered by a partner. It is an operational problem which will affect delivery times. There is also a humanitarian angle here. How many delivers should one expect a human to do on one day so that they earn a comfortable living for that day? Secondly, increasing the value. With high-end restaurants coming in and the families ordering more, the value of an order might increase. But once COVID goes away, families might prefer going to dine out like old days. Also, the fine dining restaurants offer not just food but an experience which Zomato can't deliver. And then the biggest pitfall is the new users Zomato might chase. Those are mostly going to bring only low value per order. But Zomato's data counters this very well. Customers spend 4 times more in the 4th year compared to the year they signed up. Zomato has been doing a good job making the customers spend more and more every year. But this is only the total spend and not per order spent. Zomato would want a customer to order for higher value every time he orders. To grow their business, Zomato might look beyond food delivery as well. One of the news doing the rounds is the likely buyout of Grofers by Zomato. After all, they are looking to pocket a near 8,500 crores from their IPO that is coming up. If you like this explanation, leave a like for me. Also, please share your comments with me. I will see you in the next video. Until then, goodbye.